So, welcome. I've been doing these videos for the last couple of months now, and I'm excited to have you on because you're the person who brought me into the business. You inspired me to join. You taught me everything that I know, and you got 40 years of experience that you can hopefully share and give some advice to whoever's listening to this. And yeah, I'm excited to get into it and chat with you. So,
39.
39.
Easy. 39.
That extra year counts.
Yeah, it does.
Nice. So, look, obviously, I followed you into the business. I loved watching you work. I loved meeting your clients, and I saw the value that you brought. You have a much different story than me. Your parents weren't as happy when you joined the business as I like to believe that you were. So, I want to start off with why'd you get into the business, and more importantly, what kept you around for so long? What did you learn to love about it?
Perfect. Well, in putting this together, first of all, I have to say thank you because there's no form of flattery higher than having your son follow you into the business. So I'm very, very blessed to have you here. And after 5 years and watching what you're doing, it's exciting. So my excitement comes from the fact that after doing this for 40 years, some things you just learn with conviction and experience. And I said, if there's any way that I can fast track some of your conviction and your passion so you can impart that to your clients, like I'm hoping you don't have to wait 40 years to have the same passion I have. And if I can do anything to make it happen now, and today in any way helps, I'll be very happy. So happy to be here and thank you so much and proud of everything you're doing. So having said that, there was no big academic story to my path. As you know, it was more an accident than anything else. I did my degree in finance at McGill, and I had 3 job offers lined up with companies that you guys wouldn't even recognize because you're too young, but Midland, Walwyn, Merrill Lynch, these are all old
No, Merrill Lynch.
There you go. Okay, in the States, but they used to be in Canada. Anyway, that to say, I had great jobs lined up. Things were fine. But there was one interview with London Life, and being the cocky guy I was at that time, I said, listen, I'm going to go and practice my interview skills. I don't care. I got nothing to do. I'm going to go see this guy. So I sat down, cocky as all, never mind. And the guy was very direct and to the point. I told him, listen, I already got some jobs. I came here to meet you. I just figured I'd hear what you have to say. And he asked me 3 questions. He said, Glenn, what's your biggest strength? And I said, well, I know a lot of people, and I like people, and I care about people. And then he said, what's more important to you, making money or having a title? I said, I don't care about a title. I want to make money. Yeah. Then he asked me, he said, well, if that's what you want to do, when in your life do you think it makes the most sense to take a chance? When you're older or when you're younger? And I can tell you, to this day, I remember, and I don't take a pause about many things, I just sat there and I looked at him, and I looked at him, and I just said, when you're younger. And I decided then and there that let's dance. Like, I dropped my other 2 jobs, decided I was going to sell insurance at London Life. My parents had a cow. And, it was an amazing experience. And what got me into business also kept me in the business, because those questions, they didn't stop then. Because this part of the story you may have to edit, but when I started and I left home, and they had a 5-week program in London, Ontario. Okay, I won't share it all, but when I came back, within a week, I had a letter telling them that I had tarnished their reputation and set their image back 10 years in the community. And I got in my office, I was brand new, and I said, oh, great, I'm going to lose this. I didn't even start, and it's going bad. And so the guy wrote me a letter, and I wrote an answer to the letter, and I was all writing my answer to the letter. And the guy who hired me walked in, he said, Glenn, what are you doing? I said, I'm writing a letter. And I'm just talking about the way he always asks questions. There's a point to my long story, I'm sorry. But he said, Glenn, when you read this guy's letter, what happened? I said, I got mad. And he said, when this guy reads your letter, what's going to happen? He's going to get mad. So if if he's mad and you're mad, who wins? Nobody. I said, Glenn, go home, rip that letter up, come back tomorrow, write it again, and remember, honey goes further than vinegar. So this guy like taught me a lot when I was rough around the edges, but it all comes back to one thing. The reason I stayed in the business is because I learned to ask some of those questions that are so important. This guy never told me what to do.
Yeah.
He never told me what to do, because when you ask a question and you get an answer, the person who gives the answer owns the answer.
Yeah.
If I tell you something, I'm telling you what I want to tell you. But if I ask you a question, you answer me, you own the answer to the question.
Mm-hmm.
So why I'm saying all this is that the reason that I love my job is because when I was very early in my career, I asked my clients a lot of questions. Like I'd always tell them when I showed up for the first time, I said, guys, I'm unarmed. I got nothing with me. All I want to do is ask you some questions so I better understand who you are, what's important to you, what are your opportunities, what are your fears. And you know what? All that to say that the relationships that I've built with my clients over 39 years, not 40, have become so important to me. Like there's no higher reward. My clients won't rent or lease a car. What do we do with the mortgage? What should my kid do? Should we buy or rent? When should I take my retirement? There's so many questions that we're involved in their lives, and we get to make an impact, and I don't take that lightly. So that whole start of my career, as silly as it sounds, influenced everything that happened and all the relationships that I built, because I just have a genuine curiosity. I think it's so important to have that curiosity.
Yeah.
Because if you don't have that curiosity and you're just saying a tract and you're saying, oh, I learned this and I know that, forget what you know. People don't care what you know till they know how much you care. Yeah. So if you ask the questions and you care about the answers, your job will be so much fun.
And our job is really fun, but some parts of it can be a little bit less fun. We do have to have a lot of like tough conversations with clients. Yes, we talk about wealth management, planning, and some stuff that excites the clients. But a big part of our role is talking about the insurance side of the business, where there's possibility for disabilities, big illnesses, jobs not working anymore, and death at some point. So that was one of the things that I struggled the most with starting off in my career. I've seen some of the experience that you've lived through and that our families lived through that's motivated and give me a bit of conviction, but it's not always easy. And at the end of the day, you do that really, really well. Like I learned so much from sitting in meetings, listening to you talk about things that the questions you ask, sometimes I wouldn't even dare ask because it made me uncomfortable to the core to be able to sit in front of somebody and talk to them about potentially about their death, about them being disabled. Like that was hard. And over the last while that I've been working, I've got better. A lot of that comes from the conviction that you've shared with me, but I thought it would be cool that maybe you could talk a little bit about where that conviction comes from on your end, because I learned through your experience, but you've had the experience and you've gained the wisdom over the 39 years that you've been working to share that and to be able to bring that advice to people. So where does that come from for you?
The conviction, I'll probably say the word conviction way too many times, but it comes from experience. And when you have some good news or something you believe, like if you knew the winning number for a lottery ticket, it's a little bit of an extreme example, how motivated would you be to share that with somebody? You wouldn't say, hey, you should buy that number. You'd be, hey, you should buy that number. You got to buy that number. Yeah. You have to get that number. So when you know something's that important, then you know it because you learned it, you've seen it. When you know that, you share it. But you don't share it like, oh, by the way. You share it like, no, you need to do this. And disability insurance, we offer a lot of products, and we do a lot of planning. But everything depends on your ability to work. Yeah. I always say people know how much they pay for their car insurance. You could probably tell me what your deductible is. You know if you're covered for your contents in your house, how much you pay. You could tell me who your carrier is, which company you're with, and how much your premium is. You could tell me all those things. Yeah. You could stop anybody in a room and say, hey, what are you covered for disability? Like, are you covered if you're partially disabled?
No.
Are you covered for your commissions? Are you covered for your bonuses? Are you covered for your profits in your company? And what if you go off and come back? Are you covered? Like, is it taxable? How much do you pay? And who's the company? People are going to look at you like, what are you talking about?
And it's worth 1,000 times more than
What are you
anything
talking
else,
about?
right?
And you know, and I've paid at least 4 disability claims for every life insurance claims. And then people look at the disability and say, well, it's expensive. It's expensive. I mean, you tell this story before. I don't want to take, but I can't. I always have to tell a story. Like this might be the story part because I could tell a lot of stories here. But I always tell the story about the machine because I just love the machine story. I know I've seen you do it before, but for the 2 seconds it takes is if I offered you a gift, option A, you have a machine that goes in your basement and every year it prints out $100,000 cash. But if it breaks, I can't fix it. That's option A. Option B, I'm going to give you the same machine, but every year it prints out $97,000. But if it breaks, it comes with a warranty. Which one would you choose?
I hope everyone who watched my last video said the second machine, but
so, you know, like, don't tell me the disabilities insurance is expensive. It's like you're going to insure the eggs or the goose that lays the eggs. I mean, if you like, you're going to insure the goose or the eggs. I mean, you know, think about it. Anyways, that said, the disability insurance, there's so many stories that come out of disability insurance. And I think it's really important before I even share these stories, because this is something when you're working with business owners or highly paid professionals or highly paid employees, C-suite, CEOs, all the guys you think are so well covered and they don't need you and they don't need us. Wrong. These guys are a victim of reverse discrimination. These guys work at companies or have plans for their employees that cover 99% of all their employees. An employee plan is designed to cover the masses, and I don't mean this in a demeaning way, but most disability benefits are capped, if they're lucky, and this would be high, at $10,000 a month tax-free, less, which covers 120 grand, probably 300 grand of income. So that covers everybody, guys. So I know I'm talking to a pretty niche market, but you need to understand that niche market is not served. Because anybody making over that, they make the most money, and they're not insured, and they don't even know.
And they're spending as much too, so they need that extra.
They don't know. That's why we work with Lloyd's of London. That's why we'll go and get the special insurance contracts to top them out. Like, the reverse discrimination is ironic because the top guys make sure that everyone's covered except themselves, and they don't realize. So it's too important not to get out there and tell these people, because it's a huge hole in their planning. That said, the conviction, so this is maybe not the fun part of the story, because the conviction comes from having seen a lot of claims. And the claims, I mean...
You said 4 for every life?
Easily. I could tell you disability claims, like, I know my disability, by far the most. Critical illness, a lot of claims. Life, listen, it's not magic. Science is getting better. Science is keeping us alive longer. So we're getting kept alive longer. It doesn't mean we don't get sick. Things are more stressful. We live in a society where there's too much trouble. So people get sick. Science keeps you alive. Death benefits are farther away. Disability and critical illness, sadly, are in your face all the time. Not a fun conversation. But, you know, my dad was probably one of the first guys to make a claim. My father worked at Sears his whole life, and he came in to see me at London Life, and he had a pension his whole life. But the pension paid at 65, and if he died, my mother only got like half of it. So I said, Dad, like, if something happens to you, Mom's not covered. Like, so we sold him an insurance plan at that time, a big insurance plan, so that if he died, my mother would have the income. And on that plan, we put a waiver of disability insurance. So what happened, my dad was 48. My dad,
48?
Yeah, because he made a claim when he was 50. Like, I was like, when I was, he made
2 years after you bought the policy.
2 years after he bought the policy. He was off work. His plan at work paid his disability insurance, but it wasn't a rich plan. Like, it wasn't, he got by, it was okay, but his life insurance that he was paying $500 a month for was paid for life.
He's paying $500 a month back in
1988. Yeah, he was paying $500 a month for insurance in 1988, but that being paid for. He passed away last year, sadly, at 85. That being paid for until he was 85, that little extra money made a huge difference to the estate, to his cash flow, impacted his life in a huge way.
Yeah.
My father-in-law, your other grandfather, was an entrepreneur, an electrician, and he made a claim. He didn't have disability insurance prior to me coming along.
Yeah.
And I sold him some disability insurance for X dollars a month. And I think at age 54, he'd been off, and he's alive today, God bless him. But at 54 to 65, he collected that money.
Yeah.
Like, it would have changed his whole family's life. I made a claim on disability. So,
a couple of years ago.
Yeah. The thing about disability is everybody thinks they're invincible. The problem you have is when someone's lived it for 39 years, and that's what I try to share with you. Don't look at me and tell me you're invincible. Yeah. Because you're wasting your breath. Like, please leave or listen, because there's no point. I made in COVID, right when COVID happened, I don't know if I had COVID or a cold, but man, when COVID hit, I was on the phone like 24/7. My voice got bad. I strained a vocal cord. I was off for like 6 months. Or I could work half days for 6 months. Yeah. But I collected on my disability that I had for like 37 years. Finally made a claim. And by the way, this is not a claim you want to make. You don't want this money. I tell people all the time, I hope you waste your money on critical illness and disability. I hope you waste your money. Yeah.
That's the worst sales pitch ever, but I say it all the time.
I hope you waste your money. But you can get creative with the disability insurance, because you can do plans where you get half your money back if you don't make a claim. And the beauty of that, I always tell people, if you're going to bet on anything, because you're invincible, if you're going to bet on anything, bet on yourself. Yeah. Bet on the fact that you're not going to make a claim, and we'll give you half the money back. Yeah. So anyway, so I made a claim, my dad, my father-in-law, and then, like, sadly, and the stories don't stop, but I mean, one of the most, one that hurt me a lot and a lot of people around me is one of my best friends at 52 had glioblastoma, which is brain cancer. Yeah. And, he was sick for a year, and he had his disability insurance with me. So he collected his disability insurance for a year, which enabled his family to be supported and be okay. He had a critical illness policy with me, which gave him a lump sum of money, which helped him try get another diagnosis in the States and try all the experimentals.
He was able to fly out to the States and see specialists out there.
With the money from that. Yeah. So he collected the disability insurance. He used the critical illness insurance. And sadly, when he passed away, but perhaps very in a blessing sort of way, at least before passing, he had the peace of mind of knowing that the life insurance was going to take care of his family. Yeah. So living this, I can tell you, it doesn't ease the pain. Yeah. This is not a fun part of our job. It doesn't take money doesn't take away the suffering that comes with it, but it certainly makes it a lot easier for those around you to be protected. So on the disability side, like, I don't think there's anything more important. Like, I think that's the starting point of every financial plan.
Yeah, putting a fence around the risk is definitely part one of any plan that we work with clients, is making sure that, even if it's an emergency fund that gets started, but disability has to be a part of everyone's plan. If they don't have it at work, and if they have it at work, and like you said, they're being reverse discriminated against, then you want to make sure that they're topped up. Oh, yeah. So, we talked a lot about that when I started, was, talk about the disability first and protecting the risks, because if you don't protect the risks, then what's the point in doing the rest of the plan? One thing goes south, and it's great that we have this plan to save X dollars a month and invest it and do all of this, but you lose your income, the plan goes down the toilet. So I think that's really valuable, really important, and I try to share that. And like I said, I learned a lot of that from you, and from obviously the stories of my own grandparents, of you, of your friend who I was close to as well, and
even Lloyd.
Lloyd, which
that's a story you can share. But
yeah, so we've got tons of them. But it's I'm fortunate enough that some of your conviction rubs off on me, and from the start, I saw the value of all of that.
And you said before sometimes you were afraid to have those conversations. Not afraid, but they're hard to have.
They're not comfortable.
Yeah, but you know what? You got to change that. Yeah. It's too important not to have them. Like as soon as you believe that, like if you believe your job is to put a fence around the risks, then you have to put a fence around the risks, because after that it's all fun. Like
Yeah.
whether they like
Yeah.
it or not, that you should never think
Yeah.
twice about
No, and
telling people about it.
I think it's something that distinguishes us from other advisors in a sense as well, that we have the understanding of how the insurance side of the business works, because
Huge.
a lot of advisors don't know, or that's not part of the business model. And I love that that's part of what we do, and I've gotten more comfortable with it over time. I don't enjoy it. It's not fun, but it is a way that we can add value in a more unique way, I think.
And so many business owners, sorry to go on about the disability, but I just think it's so niche. So many business owners, they don't even know that they can get off of CSST or workman's comp
Yeah.
and do an income wage replacement with a couple of key employees, save the CSST. And the CSST covers if you have an accident at work.
Yeah.
Disability insurance covers if you have an accident at work, not work, or sickness.
Doesn't
It's not
matter
the
where
same
it
thing.
is. Yeah.
So like you can get off CSST, and depending on their industry, the rates are high. The money you save pays the plan, and you've done them a huge favor. So it's very niche.
Yeah.
I think it's the starting point of anything. And the more money people make, no, that's not really true, but the more money that they make, the bigger the lifestyles, and most often that reverse discrimination is true. Yeah. They're not covered.
Yeah.
So anyways, enough preaching, I'm sorry.
No, that's good. So outside of putting a fence around the risk, you've seen, and I've been around not that long, and I've seen a lot of shiny objects come our way.
Yeah.
People come into our office wanting to sell us the latest and greatest investment or concept or strategy. You've been doing this a lot longer than I haven't seen these shiny objects
Oh, you've
fail
seen
yet.
enough of them. You're good at looking for them. You're good. You're
Yeah.
good.
But
You keep bringing them to me.
yeah, the good ones, the ones that but I don't know if they'll stand the test of time. They're
Yeah.
intriguing. It's interesting. I think it's our job really to be aware of everything that's available to our clients. Because if we're not doing the research, like I like to know about the shiny objects, we don't put a lot of them into practice, to be fair, but we're available. We know what's available for specific situations. But look, after 39 years, there's got to be some things that those things will come and go. But there's got to be a few either strategies, concepts, or lessons that you've learned that have really stood the test of time, that maybe they didn't get you 20% year over year returns, but they've been good, they've been valid, and they've been consistently driving value for your clients and for yourself. Is there what would those be?
Well, I guess one tried and true financial concept is that 15% of zero is zero. And that comment on its own may seem really stupid, but I'm going to say it again. 15% of zero is zero. And why I say that, I meet so many smart guys who have the best ideas in the world, and they know how to make 20% on this, and oh, they're killing it here and they're killing it there. But they didn't save any money. So they got great ideas.
Yeah.
But 15% of zero is zero. And then I'll meet an older family or an immigrant family or anybody, and man, they are not making a lot of money. And they don't want to know anything about these complicated ideas, but they are putting that money under the bed, being extreme. They're putting it under the bed, and they got a ton of money.
Yeah.
So 15% of zero is always zero. And then my point of this story is, one of the things you have to do is encourage people to pay themselves first. People have to pay themselves first. Like, we make our job so complicated. Like, put a fence around your wrist, pay yourself first. Like, it's so easy if you motivate them to do the right thing. But paying yourself first is so important. I tell people, like, I'm not going to ask you, I wouldn't ask you on camera.
Yeah.
But a kid, if you want to catch someone and really throw them a curveball, say, hey, listen, how much money have you made in the last 5 years? 50 grand a year, 5 years, 250 grand, just make up a number. How much money do you have put aside to show for that money?
Yeah.
15,000,
Yeah,
whatever.
the
if they're
answer's
lucky.
never good, yeah.
So whatever the answer is, I don't care what the numbers are.
Yeah.
But if you ask that question, how much money have you made in 5 years? And what do you have put away to show for it? And then you ask another question, say, hey, well, if you don't want to have the same conversation 5 years from now, what has to change? What do we have to do differently?
Yeah.
Because I don't want to have this talk 5 years from now and you tell me the same thing. It's a disaster. Definition of stupid, doing the same thing over and over and expecting different results. Like, so pay yourself first. 15% of zero is zero. Then the question is, okay, well, where do you put the money? Okay, that's wonderful. You talk about tried and true thing, investment vehicles, but I'm a big fan of the life insurance. Like, I mean, I believe in the life insurance.
Yeah.
Again, not the sexiest thing in the world.
Yeah.
You've got TFSAs, first-time home buyer. There's a lot of things out there. They're all got to be done in order. But I don't think it's smart to believe that the life insurance doesn't have a place.
Yeah.
Like, I have a plan, and I know I always say, Jared, I want to share the plan. It doesn't matter. But I have a plan since I was 23 years old. I was paying $3,500 a year, and I still am, since age 23. I got a huge cash value. I got a big death benefit. It stood the test of time. It's still there. All of my other shiny objects have come and gone, and something else has happened. But that insurance plan, had I died, would have protected you and the family. If I was disabled, it would have been paid for. Yeah. And I tell people, or there's two things. I tell people, and you can ask the question and have them answer, but I always tell people, it's the only asset you're going to buy that becomes more expensive with age. Yeah. So it's the only, of all your investments, it's the only one that gets more expensive. It's the only one that you have to be healthy to get. And I'll take a minute and talk about this because I know you live it all the time, but insurability, and maybe you can talk about this. I'd segue you into one. I'll let you cover it, but insurability is not a given.
It's so not a given. And it's not as bad for life insurance, but not to backtrack to our conversation about disability, but 50% of applications I put in for critical illness or disability get denied. It's a little bit more, they have a bit more leeway on life insurance, but yeah, you got to make sure that you're healthy when you have it, when you apply for it. So, to that point, like, I know life insurance has stood the test of time. I know you're excited about sharing your plan. If you want to tell the values, go to tell the values. You put $3,500 in it for years, and if you want to share, you don't have to put it up on the screen. But
no, I mean, I have it. I share it openly, but I mean, and the cash value is about, there's like almost $400,000 of cash in that plan, and I'm insured for like $1.3 million. Yeah. I've got all that. So,
there's not a lot of investments that you put $3,500 into every year for 30 years and then have a death benefit of $1.5 million.
Think about what makes things work. Things work when they're an obligation. If you start saving money, you know what? You save money till you can't. Or you do something till you can't. When you have the insurance plan, it makes you do it. So when you talk about like things that stand the test of time, obligation stands the test. Like, it's there because it's there. It's still there and growing. So you got to be healthy. It only gets more expensive with age, and you need to be covered when you're young. So like, instead of, like, I always ask people, I say, well, like, when do tax deferrals work best? When you have more time or less time?
Obviously more time.
So the insurance is a tax deferral. So the more time you have, the better.
It's interesting because you talk about, like, we need to do things in order. Like, I call it, when I work with younger people, I talk about sequential financial planning.
Smart. Like,
there's TFSAs, there's RSPs, there's FHSAs, there's all these vehicles that you might be better off taking advantage of prior to buying a life insurance policy. But your health isn't guaranteed. So, what I'll often suggest is that people buy a term policy because you could convert that term policy. All right, but what's your thoughts on that? Do you think everybody should have a permanent life insurance policy as soon as they can, or does it make sense to buy a term policy, convert it when cash flow permits? Or I'm just curious because that's something that
I think your sequential planning. I'm a math guy. I like math. I always revert to math. Has to make sense. So math, sequential planning, and doing things in the right order is important. But that doesn't really, health doesn't fall into that category. Exactly. Like, I can't put a number on health. I can only tell you you're going to need it. Yeah. I'm going to tell you you're going to end up buying it anyways. Yeah. So you can buy. I tell people you can buy it
Yeah.
from me now when you're young, or you can buy it from me 5 years from now. I'm not in a hurry. I'll still be here. But when
Yeah.
you buy it from me 5 years from now, you're gonna pay more.
Yeah.
I'm only gonna be happier. I mean, it sounds stupid, but it's. I'm not being
Yeah.
stupid about it.
Yeah.
But
We get
you're
paid
only gonna
more.
pay more.
Yeah.
Like so, I'm gonna go back to paying yourself first because I think the trick with that is if you can get them to do all the important things, I'm going to say, even if you start the insurance plan in any way or form, whether it's
Yeah.
a term plan to cover the risk, whether it's a small permanent plan, whatever fits the
Yeah.
situation, squeeze the extra money out of them to do it. You're
Yeah.
only doing them a favor. So it's that pay yourself more thing. There's always the math side, there's sequential, there's tax, there's all the things that goes into our planning that's so
Yeah.
important. But cover the risk because it's important. I just seen too many examples.
Well, that kind of leads me into a question I've been excited to ask you on camera because you've told me this all the time, and this is probably why I've enjoyed what I do so much and have had a little bit of success doing it. What do you think our first primary role as advisors are? Because like we're talking about so many different concepts, products, strategies, planning, but and I'll let you give your answer to that, but I think it's a really powerful answer knowing it already. But I'd like you to share, what we believe our primary role as an advisor is.
Yeah, well, people buy cars. We have to sell insurance. The word selling, everybody hates the word selling. But our primary role is to motivate people to take action.
Yeah.
And I know people hate the word sell, but we do all the planning, we do all the teaching. You can be the best teacher in the world. You can teach the guy all about his finances. You can do the whole plan. But if you don't motivate that person to do anything, you haven't done your job.
Yeah.
If we don't motivate people to take action, you hear me say carpe diem all the time. If we don't motivate people to take action, we are not doing our job.
Yeah.
So that conviction, that passion, that fear, I don't like to use the word fear. I'm really not a fear guy. I don't like to preach that. But you have to bring, like I say, people buy cars. Nobody's going to buy insurance.
Yeah.
When's the last time I'm going to come on, I'm walking in the showroom, I'd like to buy that insurance plan. Like, it's not going to happen.
You don't think we could start a store that just has insurance on the shelves?
Yeah, Royal Mount, let's go.
Yeah. No, it's definitely not it's a push product, not a pull.
It's a push product. And one of my favorite saying, but a sale is really a transfer of enthusiasm.
Yeah.
So if you don't believe the product,
Yeah.
no one's going to buy it from you. But if I really think the product is something you need, if it's the winning 649 number, you can tell me no. But after you tell me no, just be sure you're clear on what I want you to do, because I'm going to tell you, and motivating people to take action. And sometimes it's just the questions. Like, you just say, hey, is there any reason why we shouldn't start the process about putting the fence around the risk now?
Yeah.
Ask them, and if they're going to say no, not just no, tell me why not.
Yeah.
Why aren't we going to cover that now? It's not a risk.
Yeah.
It's not important. Like, why wouldn't you? So
Yeah, what's that old saying? Like the only two things that are certain in life is death and taxes. And
yeah,
the insurance sure helps solve that problem, if not in its entirety. But
yeah. So I think our job is to really motivate people, because plans and intentions do not create wealth.
Yeah.
Not motivation, but discipline and action do.
Yeah.
So discipline and action will create wealth.
Yeah.
All of them together are important, but you can have the best plans in the world or the best intentions in the world. If you don't motivate them to take action, you could be a great teacher, you could be good at all you're doing, but you're not going to excel in transferring that enthusiasm and the importance of what we do to the client.
Yeah.
So they take action.
And people, you seem to have a type, like this is you. People who do that really well in business also, mostly that trait will be an entrepreneur's trait or a business owner's trait.
Yeah.
They'll make decisions quick. They'll understand the power of what you're talking about. So like I've had the privilege of working with a lot of your clients, and I know a lot of them are very successful entrepreneurs, businessmen, like you said, C-suites, all of these people. Now, this is maybe not so related to what we do, but I'm curious for anyone who might be watching, what's the common traits that you see in hyper successful people that you've had the chance to work with? And part two to that, like what would you say to the next generation of entrepreneurs, the guys that I'm going to be working with and working with now to get that success? Because what I've always, one of the things that's inspired me to, I work with your clients, I work with a lot of younger entrepreneurs, business people, and people in my own age group, but I've always wanted to transfer the lessons that you learned to them so that they didn't have to necessarily learn from the mistakes of the past generation. So, coming from you is going to be more valuable than from me. What's your favorite thing about that? What's some tips you could give us?
Oh, there's a lot there, I guess. I don't even know. I mean, some of the basic things. I mean, I think the biggest tip, because all the basic things are basic, they're worth talking about, but they're basic. I think the one thing that is worth encouraging people to do is to aim high. Like, we start here and we build up. Sometimes you have the benefit, and you sell yourself short, and everybody needs help. But when you're convicted about what you're doing, you should never be afraid to go chase the C-suites or the business owners. Like, don't be afraid to chase cars in traffic. Like, look for the one you want and chase the car, because you know what? To be successful, you're gonna have to take risk. Like that question asked earlier, like when you have a family and a mortgage. I've never had a salary.
Yeah.
So my whole life, 3 kids, I've never in my life had a salary ever. I'm never, ever. So when I work with business owners or professionals, I totally empathize. I understand their risk.
Yeah.
I understand that they don't sleep at night sometime. I understand their challenges, their fears. Like I lived it. I know. And you know what? The opportunities, challenges, and fears and the reasons for success, they are not different amongst businesses. In other words, they are very common.
Yeah.
You are going to have to work hard. You are going to have to be honest. You're going to have to put your clients first. You're going to have to be enthusiastic. You're not going to sleep at night sometime. You're going to have to want it. You're going to have goals. You're going to be scared. You're going to be all those things. On the flip side of the coin is after you get through it, you're going to be proud of what you did. You're going to be work with people you like. You're going to love your job. You're going to be compensated for it. You're going to have freedom. But people today tend to a little too much entitlement, and they just think they snap their fingers and everything's delivered and you do bang, bang, boom. And no, wrong. Yeah. So wrong. Like, you're going to pay your dues, put your helmet on, go out there and do it, believe it, but believe it for the right reasons. And if you're doing good for the people you're working with in one way or the other, it's going to work.
Yeah. So believe in what you do and be ready to work.
Yeah.
You have a bit of a...
You got to work.
I hear a little bit of our generation may not be as primed to do it as yours. Is that what I'm hearing?
I would never say that on camera. No comment.
Okay.
No, you can't generalize, but people are brought up differently. Necessity drives. Necessity is the mother of invention. Yeah, like it just is. So when you grow up and you don't have choices, stuff has to happen. You have choices. Everybody's motivated for different reasons. So that's a whole.
But it's to know what's motivating you, what's the driving factors, and then just go full pin, blow your heart into it, and don't give up. Nice.
Yeah, and enjoy it. Yeah.
And have you had any aha moments throughout either the career, your life, like that, either relating to anything we've talked about, but...
Yeah, I think probably a few. I guess when I came out of university, I think I did my financial planner and my CLU right away. I think it's important to have a higher education. Okay. I think you have to know enough to be dangerous. Yeah. I think it's really important to know enough to be dangerous in other people's sandbox. And what I mean by that is I have to know enough to be able to talk to the accountant, the lawyer, and the business owner to recognize the problems. Yeah. I do not want to be an accountant and lawyer, or I don't want to do their job, and there's no chance that that's going to happen, but I have to know enough to see a financial statement, to recognize a need, to see an opportunity, to know where where if there's a way to exploit the tax system or put more money in our pocket that we work so hard for rather than the government's, I got to know what it is. So I think education's really important. I think an aha moment was at one point I had to decide to leave where I started. And the motivation was because I wanted to be independent. I did not want to work for one company. I think if we represent our clients, it's important to realize that not one company can always be the best for all situations. And as soon as you limit yourself to that, you're doing your clients a disservice. So that came at a price for me when I left after being there like for 14 years. I left everything behind and started over again.
Wow.
Because I wanted to be independent.
Yeah.
Because there were times where that wasn't the best. I had to be able to sell everything. And I think to represent your clients fairly, and this isn't a dig, but maybe it is a dig, but we're independent. And I don't think we talk about it enough. We don't work at the bank. And I'm not, the banks will get upset with me, but we don't work at the bank. We don't sell just bank products. We don't work with bank quotas. We don't change our people all the time. Like, they're our biggest competition because they come with the security and they come with so many things.
The name and everything.
But you have to know that being independent and knowing what we know counts for a lot. And we don't give ourselves enough credit there. I think one last aha moment, I think when we finally decided maybe 10 years ago to work with just one investment provider, DFA. That was a really big aha moment because I used to work with a lot of different providers out there for products. And what we would do back then is we would look for the best manager, and this guy did good and this guy did better. Oh, this guy's a rock star. This is good. This is bad. So what we were doing is we were driving forward. So we're driving the car forward. We're looking backwards. And then we crash into the wall. And we're driving forward and we're looking backwards and we crash into the wall. We wonder why we crashed into the wall. It's because you're looking at all these past returns. Meanwhile, the manager changed. He changed philosophies. The guy, you know what? So, like, I think without talking about our whole philosophy and preaching about it, the lesson there is that the most important thing about having an investment philosophy is that you have one. I don't care if you want to be passive or active or trade stocks, stay in your lane. So, now we stay with our investment philosophy. We've got accounts where the other broker will call me and say, Glenn, how'd you get that account? Your numbers were terrible. I said, guys, I don't care about my numbers last year. It's the evidence-based investing philosophy. Small cap, value, profitability may not pay every year. If it paid every year, there'd only be one way to do things. But you will be rewarded if you stay in your lane. So changing and sticking to our philosophy, and I always say we're not half pregnant. I don't want to be half pregnant. We only do things one way. If it doesn't resonate with our clients, then we're not the people to work with. So those changes, I guess education, independence, and having a philosophy, they marked my career. They helped.
Nice.
Had an impact.
For sure. And I think, I'm blessed to be working with you, and, we've got Mom in the office, and it's a really good environment to be working, to be learning. What do you think, what's the biggest blessing that that business has allowed you to have? Or I don't know how to exactly phrase the question, but after working so hard your whole life, a lot of good things come out of it, a lot of difficulties, but what's one of those blessings that
well, definitely, I guess one general, one specific. I guess the blessing, the clients I have, friends, I take, after 39 years, like so many of them are friends, and the relationships we have and the fun I have working with them, and seeing them succeed, like you talked about, the death and the disability, all that stuff is not the fun part of the job. What is fun, or what is really rewarding, is when you work with them to do a retirement plan for like 20 years, and at one point it's a dream, then it's becoming a reality. Then 5 years out, okay, it looks like we can do it, we're good, but we're on. And then 5 years later, game over. You cracked it, and they're in spades now. Like now they can retire, and there's no Like you got that extra room. It's not fun doing a retirement plan, and not everybody has that luxury. A lot of people get there and the plan's tight.
Yeah.
But when the plan's really, they got room and they made it and it's good, that's rewarding.
Yeah.
So when I couple the value of those relationships with seeing a plan come to being a success, very cool. I guess on a more specific note, seeing people rally around a cause that we started maybe 2015, 20 years ago.
20 years.
20 years ago, man.
21
2005, I felt led to start an orphanage in Chiang Mai. It's not exactly what happened, but it's a God story. It's been a blessing. I really felt led to do this, and it was a Christian organization, and I remember sharing it with all my clients, and you don't mix religion with business. It's kind of like, oh boy, that's dangerous. But there was a lady who was praying. It's a long story, but I was really led to say, I went to a meeting and they said, hey, Glenn, can you help us sponsor some kids? And I said, yeah, I can help sponsor some kids. That's fine. And then I came home and reading a book, Purpose Driven Life, and it says, sometimes in your life, you're called to do something right now. It's not when you have more money. It's not when you have more vacations. It's not when your kids are older. It's right now. Holy smokes, what's this mean, man? Because the guy wanted me to go to Thailand. And I felt led to go to Thailand, and Mom said, hey, let's go to Thailand. You go to Thailand. And then to go to Thailand, I had to give up a bike trip that I wanted to go on. And I remember being in my room, and I called the guy and said, hey, Dave, when's the trip? And he tells me the date of the trip, and it's the same time I'm supposed to go cycling in Switzerland. I remember looking up going, really? Like, really? I couldn't believe it. Like, you're making me do this? But, we did it. And the point of this story is that 20 years ago, I sent an email to all these clients. And I said, listen, I feel led to do this. I need people to sponsor. Started with 30 kids. We rented some land and we made some bamboo huts. And, in 2 weeks, I had 60 clients sponsoring kids at $30 a month.
60 clients off the bat.
Yeah, well, it took like 2 weeks, and even that was a great story because God kind of laughs sometimes, but I mean it's worth sharing because I learned something. I said, these 60 people are gonna sponsor kids. This is my buddy. If I picked 40 of the 60 that I thought were gonna sponsor kids, nope, that's 40 random people I never expected. So what happened is we went over there, and I had people sponsoring this orphanage from all religions, whether Jewish, Hindu, non-believer. It didn't matter. It was just, we're helping kids, Yeah. And you've been, as a family, we've been over. You were there last year. I was there in November with my other 2 kids. Yeah. When I went there in November, we're talking 20 years later, there's now 85 kids in that orphanage. Yeah. over 20 have graduated from university, many from trade school. We got tons of kids. Going there in November, I hadn't been in quite a few years. We had all the university students come back. 12 of them were there.
Yeah, when I went, they were there as well, actually. It was really cool.
It's really cool to see university students come back and say thank you, it was very emotional, very emotional. So that was a nice, that was a real blessing because it was a testimony to the fact that your clients really believed in what we did, and they shared in something that impacted so many lives that it was a blessing that it was really cool. It was a really nice thing to share with clients, with family. I'm really grateful for that.
Yeah, that's cool. How the business, like all your clients came around to sponsor it, and like years later, even when I was there, I had some of your clients calling me to say hi to the kid they were sponsoring and stuff. And, and it's special. I think giving back is an important part of a lot of the business owners you work with too. Like they have charities and they have different organizations that they give to, and I think that's something.
I think it's important to give back at home too. Like I always wrestled with the fact doing it in Thailand, but I think there's a lot of needs here. Yeah, it's important to be involved in locally and give back to your community and help. I like to help my clients as much as I can with their endeavors because they've always helped me. Yeah.
Well, look, thanks for sharing everything that all the. Let's do that. I don't like that.
We didn't script that one.
No, yeah. Well, thanks for sharing all of your knowledge, and I hope that your conviction comes across the screen to people that are listening to this. And um, I've heard a lot of stories. I love listening to these stories, and it's a pleasure to have you on. I hope we could do this again. And yeah,
Well, like I said in the beginning, if I can give you any of that conviction, and it doesn't take 40 years, 39 years to get it, you're already fast tracking it. It's fun to watch. It's exciting. It's actually rejuvenating just to see you go at it. So just keep doing what you're doing. But it's fun to watch you cut your own path and find your own clients, your own age, and do it your way. So no, thanks for.
thank you.
Thanks for sharing. Yeah, I look forward to doing it. It was fun.
It was
cool.
fun.
Yeah, it was good. Enjoyed it. Thanks, guys.
That was a good exit, Brady.
Yeah. It was good.